Good morning, everybody. Good morning, good morning. How's everyone doing? Max, Shreve, Chris, Mary, Shadow, Enrique, Steve, how's it going? All right. Yep. Sleepy. um, so, yeah. Huge gap here. Big time volume imbalance. Hey, Tyler, what's up? So, okay, let me start on the 1 day like I always do, the daily time frame here. Let's analyze this real quick. And also the link for today's giveaway is pinned in the chat there, so don't forget to enter that. Each day is a new entry. So we have yesterday's high and low, right? We took this high from a couple days ago. We have yet to displace higher, but we might. See, yesterday, this here is where I said if we leave a fair value gap here, if price does not pull back down, which it pulled back down exactly to the high of this wick, if that did not happen and it left a fair value gap, then I believe we're going to push higher and higher and higher. It did not leave that, so at the moment, my bias is not like, yeah, we can keep pushing higher, but I'm waiting now to see, do we take this low? Not today, obviously, but over, the course of next week, throughout the end of the year, do we take this low, or does today push us up and potentially leave a fair value gap for Monday or Tuesday? So we'll see. Not much here on the daily right now. We still have this weekly potential fair value gap, which I'm sure we'll get because we won't close all the way down. I don't think we're going to drop 800 points today. 15-minute chart. Yep, this was yesterday, gapped open. This is the new day opening gap right here. And I have it marked on my new day opening gap chart that I watch off to the side. So because this was a large gap, see, 631 to 700, 70 points basically, 68, 69, whatever it is, I marked the midpoint of it as well because that's a huge gap there. All right, so that's that. So now, yeah, huge volume imbalance and gap right there. Marked it on my 15-minute. Yesterday's low right here. We have yesterday's high. We're trading right above it. Right here we have some smoothness. This was sell side liquidity. We just took that at 9:15 right here. Took that minor sell side liquidity. And now we're trading into this fair value gap. So I was waiting to see if we got this one. So this one here did invert right here. And then we got this one right here. So this is going to be the one that I want to see. Do we trade back above, or is it just going to rebalance it and drop? Because obviously to the upside, there's just more all-time highs again. So to the long side. So we'll see what price wants to do. Right now, today, it's really up in the air because the daily chart didn't quite displace. We do have this 1 hour. So if I look at the higher time frame, let me backtrack. There's not clear, like really clear sell side, buy side liquidity. We still have this area down here that I like for my sell side. Right here for my ultimate sell side liquidity at the moment. And actually I need to lock that until we trade through that. We got a couple data lows and sell side liquidity. Still have that opening range gap down there. Still have this volume imbalance, which I need to lock as well. Actually, let's make this easier. And I'm not concerned about all this gapping up yet until price starts to reach down and trade through this. Then I'll start looking at, further potential where it could go. But I don't want to lose this volume imbalance right here. So I'm gonna mark it out, and I'm gonna lock this one in as well. Let's see. I'm gonna lock that one. All right. So yeah, so basically, so what I was saying is we don't really have much area of smoothness, not clear sell side liquidity. Have this down here, but so what we have to look for, what I have to look for, is internal range liquidity, which you're gonna have some here with this volume imbalance. It was here, some minor sell side liquidity. We took that, and then we have all this imbalance all in here. So we do have, wait, am I? Yeah. So we do have, I was looking at this little area of smoothness, but it actually traded it pretty well. Because if you look, we had this low, and then this wick took that low right there. And then it traded up pretty nicely. And then right here, you have these relatively equal lows, and this wick took that. So it's trading pretty, it's delivering well from the long side to the upside. So it may not come down here right now today. And it's Friday, and there's no more news coming out today. So, I'm going to be cautious, and I'm pre-warning. I'm not expecting much today. Morning, David. Rich. Yeah, so I'm not expecting a whole lot today. Let's drop to the 5 minutes. See if we can see any intermediate liquidity. First, let me double check my opening range gap here. So we're going to have a huge one. See, we had the close there. We have the open there. Midpoint 705. If I can get it. Big old opening range gap. Okay, bring it back down. 930 here. Here's our first presented fair value gap right here. Mark that out. Getting so close to all-time highs again. So if we do go higher, again, I got to mark my deviations out if I do want to take a long. John Doe, good morning. For those of you joining that have not seen yet, that link that's pinned to the chat, if you enter in your name and email, you'll be entered into the drawing today for the free Apex evaluation account. One free Apex eval. All right, so look at this. This wick right here. Traded right up to midpoint of that wick and dropping. So let's see, right into the first presented fair value gap. Let me double check and look. Yeah, there's no real smoothness or sell side liquidity that I like, except for way down there that I mentioned, and then this huge imbalance here. So we'll see if we trade down there. I'm not fully convinced we do. Today, anyways. We'll see. Let me check, double check this 1 hour chart. Traded right into this fair value gap. On the 1 hour. Seeing this is where we took this high right here with a fair value gap, which is displacement. Traded right into it. And I'm going to mark this because it was obviously important, because he traded right down to it. We had that one right there, but I already have these you know, marked out in that area. So if we do go down into this area, price would have to trade through that 1 hour fair value gap. And that would be my kind of like signal that we are going to. 15-minute again. Let me see something here. See how this wick reached right down in, took that sell side liquidity, closed up here. Bar open, didn't quite reach down at all. So if I take this low, that high, throw on my deviations, now we have this 0.25 level, this 0.5 level. That's where I would target if I was going to go long. If I was convinced that we're going to go long. So I have to wait. Still only 9:41. But I'm going to leave those there. Trade it right into this first presented fair value gap. Consequent encroachment respected. Came up. One more kiss right there. And taken off. Might get a fair value gap right here. There's no news today. There's no reason for price to really come back down. Those are my deviations right there. So that's where I'd expect it to go. And this is the displacement I was talking about to the long side that we may get. And if I look at the 15-minute, completely just disrespecting this fair value gap. And let me get rid of this one because this one's irrelevant. Disrespecting this one completely, taking the highs with, I mean, clear, obvious displacement, right? So okay, hit the 0.25 deviation. And actually, I'm going to use this old all-time high point right here. So now we got 878.25 for the 0.5 dev. Hit it perfectly. Let's see if it drops down back into any of this area or if it goes to the 1 dev. I mean, this could be a runaway train today. Yeah, that's... I wasn't very, I guess, convinced on taking a trade today. Sell side delivered pretty well. We need a 800-point drop to reach that clear sell side liquidity, which that's too far away for today, making new all-time highs. It's Friday. Like I said yesterday, I really think this is going to continue to push up through the rest of the year and continue to make all-time highs. So this is where you don't really want to look for a short. And this thing's going to just push right on up to the 1 dev, more than likely. And if y'all noticed, I still have the same camera as yesterday. My cord did not come in. My HDMI cord did not come in. So, and you can see if I go to the 1 hour chart, I mean, this is the 1 hour gap right here that was relevant. Took these highs where we had some buy side liquidity right here on the 1 hour. This imbalance right here. took it with a fair value gap, so displaced through. And actually, there's a little gap here, so this could actually come down like that. Traded right back into it, touched it, and just rocketing out. That's what I forgot. Forgot to turn on my lights. There we go. So, this might be a boring one. We'll see at 950 though what happens. So 2 days ago, we kind of had the same situation. And I said the only way I'm taking a short is with obvious displacement. And what did I do? I took a short without obvious displacement. I was trying to scalp it basically for like 30 points. So today, I will repeat. I would only look for a short with obvious displacement. But see, this is where you got to learn from your mistakes. Even sometimes you know what to do or what not to do, and we still do it anyways. So you got to drill it in, write it down, journal it, chart review. This is not, don't make this a hobby. If you're trying to be professional or if you're trying to make this a living, do not treat it like a hobby. Treat it like a business. Everybody knows you're short, Chris. Oh, in the market. In the market. Oh, sorry. Actually, I think you're taller than me. Not much to really comment on right now, to be honest. So, anybody got anything interesting going on over the weekend? Holidays coming up? Out of town? Ooh. Hey, that sounds like me. If anybody throws up around me, or like, you know, has to do with snot or throw up, man, yeah, you might as well just consider there's going to be 2 people throwing up. Here's the link again. Yeah, I can't do it. Blood, you know, whatever. I'm not worried about that. But snot or throw up, like phlegm from your throat. Oh man, sometimes my dogs, I'm eating and they'll just like hawk up and just like that slime and like, oh man, game over for me. Game over. I'm done eating. Yeah, I only trade NQ and there's a very specific reason for that. I would love to trade at other markets. Like, you know, I know there's some opportunities like, look, and ES hadn't even reached its all-time high yet. You know, I know there's other opportunities, but I like to stay zeroed in to the market that I'm trading, like just locked in. That's one reason, but the biggest reason is my money management. Because I know exactly how much, based on the typical stops and targets that I use, how much I'm going to make or lose for the day. And that allows me to stay profitable over the long term. And the reason being is because if I make 1.5 to 2R of what I'm risking and my win rate's above 50%, probabilities are on my side. That's plain and simple. So that's literally how I stay profitable. And If I trade like ES, for example, the tick value is different. It doesn't go as far as NQ, right? So you might get like a 10-point win on ES is like, that's big. Same with YM. YM, the tick value is the same at $5 a tick, or 50 cents on a micro. But the issue is YM doesn't go as far either. You get 30 ticks, which is 30 points. That's a pretty big move a lot of times. So it just messes my money management up. Yeah, if y'all find some value on my streams here lately, hit that thumbs up for me, because I need to get this algorithm going. Pump up that algorithm. Great question. So this question just came up. Says, do you find your system works throughout the year pretty consistently, or do you see months that just don't cooperate? Great question. And especially when you're trying out a new strategy, a new system, whatever, and it's working for a while. We know things can work for a while, right? Things can work for a week. Things can work for a month. And then sometimes it's just like, oh, it's not working anymore. What I like about this, I started it trading the way I'm trading now with ICT concepts since October of 2023 is when I first started. So far, what I found is that it always works, but the thing is, because it's based on price action, and price action it always works if you know how to read it. And the reason why is because there's times that you should not take a trade, but price action, if you're reading price action, it should tell you that. It should tell you that. And there are times the market is not good compared to, with the way I am trading. So if the market's not good, it doesn't last that long. But there are, economic factors that will play into it. But typically, if you're reading price action good, the signs should be there that you shouldn't trade. And then also, that's why I limit myself to about an hour, to look for framework, look for everything to line up early. And if I don't get that set up within that hour session that I'm trading, then I'm not going to trade. So there are days that I don't get a trade. I don't get a trade every single day. But that also keeps my win rate up, and it also keeps the probabilities on my side. So really, to answer your question, is so far I haven't found that there's a time where it'll just stop working. Like, I don't think that'll ever happen. That it'll just stop working. But there are times that you should know that it's just the conditions are not favorable. Hey, Tony. Yeah, it's great to be back. I love being on here, streaming, making videos, all that stuff. I like doing it. I like communicating with people. Trading could get boring. It can get lonely, right? Hey, no, ask questions. I like questions. If there's anything I can answer based on my experience, I love to. And like I said, I don't come on thinking or acting like I know it all, because I don't, and I'm always trying to learn more. Always, always, always. So, but if I do have an answer, then hey, I'll gladly share it. And this is all just based on my experience and my learning through ICT. Yeah, Trader Joe. I do recommend the 2022 mentorship. That's the one I focused on mastering like completely. And then on his 2016 mentorship in the core content, month 4, he explains all his PD arrays like in more detail. So 2016 mentorship, month 4, that whole playlist, and then 2022 mentorship, that entire, it's like 44 videos. I've watched every video at least 10 times, minimum, probably more. over the course of the last year and 2 months, like a madman. I'd never trade the New York afternoon session because I frame out everything that I'm looking for in the morning, and if it's there, great. If it's not, then I don't take it. I just come back the next day. I used to try the afternoons, but I found that it's just my mind, like throughout the whole day, it's just not really the best for me. Took a scalp long at breaker down candle. Oh, here? Yeah, I mean, that's fine. I mean, you took it basically inside this fair value gap, I believe. So if you took it inside this fair value gap, and that's another thing through my testing and everything when I was learning, almost any fair value gap, almost, as long as there's still reasons that it could trade higher. Man, from those fair value gaps, you can usually get at least 10 points, 10 to 15 points off of every single one of them. So that might even be, and I kind of tried to build a little trading strategy around that before when I first started learning, like, oh, what if I just set a target, have like a 10 point stop, 10 point profit. Let me check the probabilities on that. And I tested that for a couple months, and you can make that work. And that's the beautiful thing I love about ICT concepts is as long as you know how it works, where price should go, how price should react to things, you can trade it. You can come up with your own entry model. You could trade it however you want. So I'm seeing this pullback, and here's a reason why you need that obvious displacement. Because if you look at the structure of the market right now, we have this low way down here, right? We have this low. You have a little bit of wicking down. You kind of have like this little swing here, a little pullback here. I wouldn't really consider just a little accumulation here at the open. Rocketed up here, right? So you can look at this as a pullback, a swing here, pull back up, and take out that swing. I'm not looking at this as a market structure shift to go down because we don't have obvious displacement, and this could just be a deeper pullback, just like I was talking about 2 days ago, where you have a deeper pullback here. I'm just going to mark up here, deeper pullback, and it to continue up. So looking at the 15-minute, we have that huge displacement bar here, right? We got 2 minutes, less than 2 minutes, and we'll get a fair value gap. And I expect price probably could trade right back to this old all-time high, which would be, let's measure what we have going on here right now. Just this old all-time high is just above consequent encroachment of this fair value gap. I'm going to mark it because we're likely going to get it. So price could trade back down into this area before continuing up. I wouldn't look for a short at all until we get, it'd have to come down below this area. That's just, and yeah, you have these 5-minute gaps. I really don't look very much at the 5-minute gaps and charts because I keep my bias on the 15-minute. I'll note, like, if we didn't have this huge run up, like let's say we had another 5-minute gap that happened up here and no other fair value gap like on the 15 or anywhere else, then I would look at it just to see if we invert it quickly, because then that'd be a sign that we're shifting back to the downside. But that's really the only reason why I look at the 5-minute chart. How many trades do you typically end up having on a typical week? I'm asking because that's my struggle. It's one of my struggle is low amount of opportunities. I only look for one trade a day. So if I take a trade every single day, that's five trades per week for me. But I'll typically get at least three to four. Most times I do get 5, but I'll typically get 3 to 4 for sure. And that's also goes along with my discipline and money management. That's why I do that. Very easy to track, very easy to keep account. And if I do more, like you could alter your money management to take 2 trades. That's fine. But the reason why I don't take 2 trades is because I'm literally framing out everything for something very specific to happen before 10:30 or by around 10:30. If it doesn't happen, then I don't need to take a trade. Like, and if it happens, that's the only trade I need because it's usually going to go 30, 40, 50, 60 points. And I'm done. You multiply even my lowest, the smallest account that I'm trading is with 6 micros. 50 points is 200 ticks, right? But let's just say my average is 150 ticks times 6 micros. That's $3. That's $450. Just that one move. And that's the minimum. And I have to, and that's why I like to eventually, and recommend everybody eventually get multiple accounts. Because now you times that by 20, that's a $9,000 day. And that's why I only need that one. I don't need anything else. So we got that fair value gap on the 15-minute right here. Let's see. I expect we could dig into it. I would need obvious displacement, but right here, this old all-time high, this would be a mitigation area. So mitigations are great targets as well. But you need room and you need clear displacement to go down. Like right now, yeah, we do have a shift. We keep taking these lows on the 1 minute. We took this. So I do like this where it tried to come up and it left this little fair value gap right there, and then it inverted it immediately. So, and it then took this low here. So we could see it trade back to about this area, 844, maybe even down to 835. It's not, I don't have really an entry that I would like to take, because it could stop right here and continue up. It could stop anywhere in this area and continue up. So there's not anything that I like short right now. Unless if, like I said, we have clear, like a big displacement down. We trade under this first presented fair value gap. We trade like down here. Then I'd be a little more convinced. But if price action just kind of hangs out and slowly trickles down, that's just a deeper pullback. A deeper pullback to continue up. And then we have the one dev up here, right? 912. Have that one deviation. That'd be a great target. So now that we hit the 15-minute, like if we get displacement up, a fair value gap, you could take it up right up to that one deviation. The first presented fair value gap, Trader Joe, would be after 9:30, the open. So you have the 9:30 bar and the very first fair value gap after that. So it'd be this bar right here that's 9:36. Now I keep all my charts in Eastern time. So just FYI, this is New York time zone. So this would be the first presented fair value gap right here. So I do see, like it is respecting this inversion right here. It is coming up, but again, I don't like a short, and I'll never take a trade like this. And I mentioned it yesterday. This 15-minute fair value gap, this is a busy, right? It's called a busy, and it's a bullish fair value gap. So if I'm inside it, I'm never going to take a short inside it. Like, I'm just not going to. That's a low probability trade. What's your win rate and profit ratio on average? My win rate averages about 60%. I fluctuate on bad months. I'll get down to about like 58, 59%. My best month so far was about 70%. And I average around 60, 62%. But, if you just do the math, that with your profits averaging 1.5 times your loss, 1.5 to 2 times your losses, you're going to be profitable. You'll make money. And that's going back all the way back to March, because I've had these same accounts since March. So 8 months now, or whatever that is, of data that I have. Why? Let's see. Why is the first presented fair value gap significant? Okay, so that it's not always something you want to just for sure hold on to, but that can tell you, that can kind of set the day, right? So we have the opening and the market traded above the first presented fair value gap. So there's a high chance that the market stays above it. And then if it trades, so if there's a fair value gap above that first presented one, and I had a really nice target to the long side, then on that, what's it called? Next fair value gap, that's where I can enter in to take it to that target. Now, also on the flip side, if the market traded way away from it and we get, I had a nice short, that could be a target coming back down. So it kind of just sets the stage for the day. Nicolo, my best ICT model is the 2022 mentorship. I've watched some of the 2024. There's some good stuff in it, but I've only focused mainly on the 2024. And that's, in a sense, what I trade as far as entry goes. I look for a market structure shift. I look for the fair value gap. I only take fair value gap entries, that kind of thing. All right, it's 10:06. We still haven't had much. I'm still, like I said, we're coming down. It respected this inversion. Like, I know there's entries, right? There's entries that I miss because I only look for the very specific entry for myself. Like, we had this inversion. Traded right back up. I know people short or, use these inversions to go short. Took this low, traded right back up into this inversion. So there's many different ways to trade this. That's the beautiful thing. So now we're right back down to this first, after the first presented fair value gap, this fair value gap. In the middle of that 15-minute imbalance fair value gap. So like I said, until now we're displacing, and until we trade below all this, I won't be too interested in a short yet. Now, if I take this entire range from that low to this high, here's equilibrium right here, right? And we just traded below it. And now we're displacing. Now we're showing that we are potentially going to go ahead and go down. And the reason why I like further down, I mean, we have a lot of reasons price could go down further. But, I got to wait until we rebalance this 15-minute completely, see what it does here at this first presented fair value gap. But if you do believe, if you're bullish and you think price is going to go up, this is where now we're back into the discount of this dealing range right here from this high to this low. Middle equilibrium is this 21,842. This right here is in discount. So you could long, if you're bullish, you would go long in this area and take it right back up to this high and maybe that -1 dev. But I'm waiting. Now, I mean, we did trade right to the middle. Right to the middle of that 15-minute fair value gap. Which this would be a 15-minute order block in here. Which now, if price is going to remain bullish, this would be a good area to go long from if you had an entry. That's the only way I would take a trade inside of 15-minute fair value gap, is if it's in the same direction as that fair value gap. But I'm not taking it long right here either. It's not something I want right now. Get rid of that fib. But I will see. So this fair value gap right here, this one is the one I want to watch. If we invert this one, then we're going to go long. If this one respects and goes down and takes this first presented, we're probably going to continue down and try to, you know, run down to this area down here. So that's what I'd be looking for. And that's why I only take one trade, right? My framework is telling me very specifically what to look for. And sometimes it's not exactly there right at the open. Sometimes I see it at 9:30 and I'm like, okay, this is exactly what I want. Sometimes I have to let it play out that first 30 minutes and then say, okay, now it's showing itself. Now this is what I want. And then once I know what I want, if it doesn't happen, then I don't take a trade. If it happens, great, win or loss, I feel confident. I feel good with my trade. So that's the key for me. And that's why you take trades without hesitation, is if you know why they happen, what's supposed to happen, and regardless of the outcome, you could feel comfortable and not like, oh, I shouldn't, should I? If you get like that in trades, then, you know, you're not, to me, in my opinion, that means you're not very confident in it. And there's something missing, something somewhere. And I've been there. That's why I'm commenting on all this. I've been there plenty, you know, for 4 years. So this year, 2024, is like the best trading year I've ever had in my life since March. Before March was pretty rough too. So immediately inverted this one. Well, almost. But see, this is where what I like. See, this is just potentially a deeper pullback to continue higher. And if we get this fair value gap in here, this would be where I would look for a long right off the top of this 15-minute. And then I would take it, you could take it either to this high, or this one deviation. And that is likely what I'll do. Spammer, don't call me. And then from here, 864, it's a big stop. But the best stop would be under this low. But since it's that far down, you can just be right under this inversion. If I take this. But, you know, I need this fair value gap right here to present itself. And this is where I don't look for your normal market structure shift and all that. Because currently the market structure, if you're just looking on this micro leg on the 1 minute, you would say that the market structure shifted to the downside. But looking at the macro, I'm looking at it as a deeper pullback. So now we have this. If it does trade back into this 1 minute, I'm not going to immediately long it. Now we might get a one right there too. I want to immediately long it because I want to see if it comes down into the inversion first. And if this area holds, that's where I would potentially go long and put my stop likely 59. More than likely under this. Under this inversion, one of these bars right here, probably this right under that old all-time high. Might get another little fair value gap right here in 5 seconds. I'm going to go ahead and pull this up to that. See, this wick reached right up here to this wick and then closed down at this 0.5. So this is where, because I am bullish overall, but this is where I want to see if it trades into here and maybe touches this inversion. So I'm going to see how it reacts here first before I just go long. Because I want to make sure it doesn't displace down. Like, it can reach down. I just don't want it to displace down. So if it does this where it's reaching down like this and the next bar opens here and and there's a potential, see how there's a potential imbalance right here? If this bar closes down, I want to wait and see if it rebalances this. Or if it reacts, how it reacts to this inversion. Because I don't want to just hop in because it could just slam down, I don't think it will, but you never know. So it hit that inversion. I want to see what this next bar does when this one closes. So I'm watching the wick right now. See, now we're taking, well, no, we didn't take the low of that wick, but hitting the inversion again. There we go. Hit the midpoint of the inversion. Just want to make sure it doesn't displace all the way through that inversion. If it does, then I'm not looking to go long. All right, I'm going long here. Well, I thought it was. And I'm going to have my stop right under this inversion. Right under that old all-time high at about 842. I'm going to see if we can make it back up to this high.
Order submitted.
So respected the middle of the inversion. The best, hold on, let's see, 63. Yeah, I'm going to put it right up under this bar here at 841. So we'll see if I want to see now this little fair value gap that it created right here. I want to see it just trade right through and invert that. But this inversion's holding. We're in here. We've already mitigated. So we'll see if we can displace up. I don't think we're quite done going long. I could be wrong on this one, but we'll see. This is I believe, a deeper retracement. Yeah, see, now the inversion is being disrespected. So we're inside this 15-minute fair value gap. Since we were at the midpoint here, like, if it trades back down here, then I just want out. Right now, it's not looking good. But the key is seeing where the bar closes. If we close in the lower half of this inversion, then yeah, then it's not, which it looks like we might. But see, I liked this 15-minute wick. It manipulated, but it might not. Yeah.
Order filled.
It's just going to go.
Order canceled.
So if I didn't go long there, then the thing would have been, oh, let me make sure everything's closed. The thing would have been, since it didn't take off, then more than likely the spot to wait for is through this 15-minute gap. Wait for it to trade below that, and then run down for those targets. So I was just convinced it'll go back. It'll continue long, and this may be a deeper pullback. So it is what it is. What was the deciding factor for you to switch from the Apex system to ICT? When I first found Apex, I followed you, but could not handle the risk reward structure. Yeah, that was one thing that I didn't with the sniper system is the RR, the risk reward on the sniper trades. But then that's why I went to move to their other trades like the LRE and Simplicity, because it had a better risk reward, and that was fine. But the reason why I moved over was I came across just some videos. I'm always watching videos and trying to figure things out. And the things that I saw, actually one of the videos he said, if you don't believe me, just that this stuff is how the market operates, then just watch on your own chart and prove me wrong. So I was like, let me see. And then I started seeing the stuff that he was saying, and I was just like, man, this stuff works. Like it's like I can't deny what I'm seeing. And then because also like I don't need any indicators at all, like zero indicators. I can take any blank chart with those concepts and trade it. That is what I loved. So yeah, it looks like, and then even now, so we shot down back to this first presented fair value gap. I still wouldn't be looking for a short yet. Like it may go short, but I still would not be looking for a short yet. Because like we're in this 15-minute fair value gap, right? So what my thinking on this, the reason why I went long, because I had this framed out, right? This range here, this dealing range, equilibrium was here. So we came down into that first presented fair value gap again and immediately inverted this one, this fair value gap, when we came up. And since we inverted it, we came down right here. It held it perfectly. The bodies were closing up here inside this 1 minute one right here. So that's why I longed from here to take it right back up, but obviously it didn't work. So, and that's what I mean. I frame something out. It's either going to work, not work, and I take it. And as long as my wins are 1.5 to 2 times more than my losses every day, then I only need to be right 50% of the time. Actually, it's like 40% of the time to break even. But you want to make money. So as long as that, and that's why I'm constantly monitoring my win rate. I'm journaling all that stuff because I need to make sure my win rate and all that stays around that 60%. Above, if it starts dropping to like 55 or 50%, then I need to figure out what's going on. Is it me? Is it the market? Like what's happening? But as long as it stays close to that 60% range, I'm going to be profitable. Just plain and simple. That's how numbers work. All right. I'm going to, at 10:25, so 2 minutes. In 2 minutes, I'm going to do the draw. I'm going to close off the drawing for the free eval. There's the link again. Get in there. I'm going to do the drawing for the free evaluation from Apex. See, look, let me show you all this spreadsheet. And I'm going to give this spreadsheet away once I have it in a way that it's easy to to give away. And it's also going to be included in my discipline psychology course. But let me show this real quick. This is where I track my stuff. This is for December, right? So I go in here, I put my day traded. I always just add my total, all my PAs together because for me, like, that's just how it works. Because I trade them all together. Make my notes. So this is what I'm looking for. My win rate right now for the month is 57%. When I add in this loss today, it'll be 50%. 4 wins, 4 losses for the month. But I look at my total at the overview tab here. I look at my total for the entire, all my trading from every month. And that needs to stay about 60%. Within the month, it could drop to 40, 50 because the month's not over, right? So by the end of the month, it needs to be above. See, if I go to last month in November, 62.5%. Great. My profit factor is 1.7. Great. I need that to be 1.5 or 1.5 to 2. This average win-loss ratio, I need that to be closer to 1.5. So those are the numbers I'm looking at. Because see, the average winner, average loser, that's not good. Like it needs to be close to that 1.5. But if I go to month 8, which is this December, That's 1.5, right where I need it. My win rate's 57%. I look at this on the intra-month time. I really look at this at the end of the month. Now, if this starts getting, I'm just losing, then it's like, all right, I got to figure something out. But by the end of the month, this needs to be like 57 is fine, but above 55, preferably around 60. And then this win-loss ratio, 1.5 to 2. And that means as long as those numbers are there, I made money. Like, that's all that matters. So that's what I'm looking at, and I'm tracking. That's why it's super important to track. And then once I start seeing a change in that, then that tells me what I need to focus on. Do I need to focus on being more patient? Do I need to focus on my strategy? Is the market conditions, are they weird? Like, what's going on? So that's what keeps my discipline in check, and that's what makes me not worry about a little loss like this. So, and that's what allows you to be wrong and still make money over time, because, you know, trading, we know we're going to be wrong sometimes, like plain and simple. And people that are all over social media and just like, all I do is win, and, you know, I can't lose, and I'm the greatest. Like, what's your real win rate? You know? So it is what it is. All right. Let's go ahead and do this drawing. Let's see how many people we have today. Also, that's why you don't want to copy my trades. It says it on there. You don't want to copy my trades, because unless you're sticking to a very, very, very strict and laid out money management plan, if you copy my trades and I'm trading around a, 60% win rate, then if you don't have a good money management plan laid out, then you may lose money. All right, let me just get this list here real quick. Today is the 13th. All right, looks like we have 38 entries today. Sorry, I just got to get this to where it doesn't show. I always just make sure it doesn't show any personal information, email and stuff. All right. Here we go. We have number 2 through 39. bring the random number generator here. Ah. It's not cooperating. It's not cooperating. There we go. All right. 2 through 39. 2 through 39. Here we go. We're going to do our drawing now. Let's see who gets the win for the free eval today. And here we go. Number 39. Yusuf. Congratulations, Yusuf, on your free Apex evaluation. I will send the coupon code to you by email. And you'll just use it just like you normally purchase an evaluation. Just enter that coupon code, and you'll get it for free. And, yeah, get that thing funded. Get paid from it. So, yeah, you'll get that in the email here shortly as soon as I get off this stream. All right, y'all. That's going to be a wrap for me. And what I do here is I remove all my drawings. I'm going to go ahead and move my all-time high back up, or up to the new all-time high here. Lock it, and you can see, like, we're still in that 15-minute fair value gap. So it's, I mean, yeah, it is what it is. So I will be trading next week, but next week will be the last week until the new year that I'm trading. I won't trade Christmas week or New Year week. Well, I may trade after the New Year on that week because New Year's Day is the 1st. Actually, no, I won't be. So after next week, the next 2 weeks, I will not be trading. So, all right, y'all. Thanks for joining today. Unfortunately, took a loss, but it happens. So everybody have a great weekend. If you're going to keep trading, as always, trade well. I'll see y'all later.